Hey everybody, coming to you from the outside. As you can see, it's an awesome day, but it's not all fun because we're going to talk about taxes. Before I get to that though, I want to remind you, if you want to talk about this or anything else related to estate planning or probate, you can talk to me over the phone for free by going to cmslawfirm.com. All right, so today we're talking about an easy way to both reduce your estate and provide liquidity for estate taxes, sort of like all in one. I had three conversations today actually about this, and I thought it's something that I haven't talked about in a while, so let's talk about it. What I'm going to talk about, by the way, applies really specifically to, well, it applies to both federal and state estate taxes, but a lot of this is going to be used for Washington state estate taxes first. Washington state estate taxes start at $2.2 million, so anything over that is going to be taxed. The first million is 10%, then 14%, 15%, up to a flat 20%, like a $10 million. So in Washington state, if you have some life insurance and you have some real estate and you have a good job, it's pretty easy to get over that threshold. Now, there are some other things to do, but today I'm going to talk about one sort of strategy that you can use to, like I said, both reduce your estate tax, sort of your net worth on paper for estate tax purposes, and also provide liquidity for estate tax payments if you need any. This is super important if you own a bunch of real estate, if you own businesses that have a significant value, things where your money is tied up and just not just cash. Okay. What I'm talking about here is something called an ILIT, I-L-I-T. It stands for Irrevocable Life Insurance Trust. What this trust allows you to do is basically take your life insurance policy, right, which would pay out some certain amount of money when you die. And you can take that policy and you can stick it into an irrevocable trust. Irrevocable means once you create it and once you fund it, you really can't change the distribution parameters. You can't change the trustees. You have very limited ability to change it once you create it. Hence, irrevocable, cannot be revoked. What you do then is you drop your life insurance policy in, you gift it in, okay? And when you gift that in Washington state, because there are no gift tax limits, there's no gifting limits, you still keep your $2.2 million estate tax exemption, but then you have reduced your net worth, the value of your estate, by the amount of that policy because you've moved it into an irrevocable trust, which moves it out of your estate for estate tax calculations. And then you can tell that trust, hey, when I die, whatever cash is in here, you can use that to then pay whatever outstanding estate tax balance you might have. All right, hopefully that makes some sense. Basically, let's say you die, let's say you're alive. Let's make this simple. Let's say you're alive and you have $4.2 million worth of assets. And part of that $4.2 million is a $1 million life insurance policy, okay? If you keep that life insurance policy in as is, just as you as the owner and whoever you want as the beneficiary, when you die, your estate will be worth $4.2 million. You'll have $2 million over the estate tax limit, and you will pay $240,000 in estate taxes, okay? Your life insurance policy, your $1 million life insurance policy, could pay that $240,000, no problem, okay? But if you create an ILIT and you drop your $1 million life insurance policy into that trust, okay, now you have moved that $1 million out of your estate. So now your estate is not worth $4.2 million, it's only worth $3.2 million. What that means is when you die, you will still be over the estate tax threshold by $1 million, which means you will pay a 10% tax, $100,000 instead of $240,000. And now you've got your life insurance policy in this other trust that just paid out $1 million into the trust. And now you can take $100,000 of that and you can pay that $100,000 off of your estate taxes. Now, to make this even sweeter, let's say you have a term life insurance policy, right? Which is, you can buy $1 million for like $30 a month. So you've created $1 million worth of assets for your family for a very, very, very small amount of money. And you've also then been able to fund that estate tax liability that you have, again, for a very, very small amount of money, okay? Hopefully that makes sense, but that's an easy way to take something you've already got, reduce your estate, provide liquidity for estate taxes, and basically just win all around. Okay? So that's it. Hopefully that makes sense. If it did not, ask me a question, leave me a comment. I will clarify. And if it did, great. I'm so good at explaining these things. It's wonderful. If you've made it this far, I appreciate you and your time. If you have any questions about this or anything else, you want to talk with me over the phone for free, you can do so by going to cmslawfirm.com. Hopefully the truck is not too loud. And that's it. So as always, thank you so much for your time. Thank you for your attention. Thank you for everything. I appreciate you. I will talk to you again soon. See ya.